Hi, welcome to MyWealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled ETFs Signal the Economy's Bottom. Alright, so the proliferation of ETFs has long been talked about, and now that you can basically get an ETF for just about any investing situations out there. Okay, the rise in popularity of managed ETFs has now opened the door for managers to make the ridiculous now possible. Okay, if you need to find an ETF that tracks, say, the Uzbekistan goat-herding clean energy biofuel companies, no problem. They'll make one for you. All right, but the arms race in ETFs has seemed to have taken a new turn, anti-American sentiment. All right, there's no shortage of bad news surrounding the U.S. economy right now, and foreign governments have made it no secret that they would love to see the U.S. lose its status and its place at the head of the table, so to speak. All right, this would put us back on equal footing with some of the other governments around there, and would make our economies more equal. All right, the call for a new world currency is just the beginning of this sentiment. All right, so I'm not sure whether our current leaders and politicians are doing us any favors by groveling and acquiescing to some of the foreign governments that have been allowed to manipulate their currency, like China, or to actually just outright steal, like Russia, in order to regain their strength. But no matter what you think of what's happened, all right, this is the collision course we're on now, and how this plays out is anybody's guess. Let's take a look at some of these ETFs that are looking to exploit this situation.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, one thing that we can be certain of is that savvy ETF companies will be more than happy to capitalize on the anti-American sentiment that's out there. Unfortunately, this is a growing trend right now, and there's a focus from ETFs that they, invest in non-U.S. exchanges and invest their assets in non-U.S. dollars. All right, and let's not forget some of the leveraged ETFs that are out there. They're looking to get in on the act as well. So let's take a look at a couple of ETFs that are looking to exploit this paradigm shift. Okay, the first one is the Claymore Gold Bullion Trust. Okay, this ETF actually trades on the Toronto Exchange in Canada, and it buys gold in Canadian dollars rather than U.S. dollars. What this accomplishes is it allows investors to take advantage of the upside of gold, while at the same time they can diminish their risk of owning U.S. dollars. Because as we know from our currency course, if you've taken it, if not, you may want to take a look. But gold is denominated in U.S. dollars, so when it trades, you're essentially buying and selling U.S. dollars. Okay, so that's one of the reasons why they changed that. Now they're going to hold them in Canadian dollars. That's going to limit a foreigner or someone who invests in this ETF. It's going to limit their exposure to U.S. dollars. Okay, the next ETF is the iShares MSCI World Islamic ETF. Okay, this ETF is designed to track the performance of the MSCI World Index, but it screens the investments according to Sharia investment principles. Okay, this is investment principles that are set up in Islam, and it's something that they're supposed to adhere to when they invest. Okay, but when you take a look at this ETF, okay, would you be surprised if I told you that the top 5 holdings of this are U.S. companies, and that in fact those holdings are Exxon and AT&T, IBM, Procter & Gamble, and Johnson & Johnson. If you ask me, it kind of sounds like a U.S. large cap fund, but I guess they're going with the principle, shh, hush, don't tell anybody, and maybe they won't notice this. Okay, and the last last ETF we're going to look at is the Direction Daily 10 and 30-year Treasury Bear 3x shares. Wow, that's a mouthful, huh? Basically what these are ETFs which are looking to manage of falling bond prices and rising yields. Okay, that's what the bear in that means. So you've got 10-year and the 30-year Treasuries, and the bear means that they want the price of the bonds to fall, which means interest rates are going to rise. 3 times is actually the leverage that they use. So not only that, but you're going to get 300% of any move. I always find these to be laughable a little bit, because if you think about it, if I buy these in my margin account on 4-to-1 margin, 3 times bear fund, I'm actually going to get a return of 1,200%. Okay, so don't wait. get in a course, get educated, go to www.mywealth.com and figure out about these relationships for yourself.
As we can see, for as bad as the U.S. may be and as unpopular as we may be at the moment, I'm glad to see that some are not discouraged by this and actually continue to embrace the principles that founded this great country of ours, namely capitalism. All right, however, the same can't be said for some of the investors in these vehicles, as these ETFs have been reporting low trading volumes. All right, so could this rise in the number of ETFs that are shifting the focus away from the U.S. actually be telling us that we're near a bottom of the economy? All right, perhaps the U.S. maybe isn't as bad as everyone might be saying. All right, so to learn more about the different ETFs that are out there and how you can make them work for you, be on the lookout for our brand new ETF investing course, which is going to come out later this summer. If you go to www.mywealth.com to check it out and be on the lookout for it. So I'm Mike Conlon. Thanks for being with me, and I hope to see you in the courses.